Todd, are you with us there? There he is. Hi, Todd.
Todd, how you doing?
I'm doing all right. How you gentlemen doing? Happy New Year.
Happy New Year.
Trying to get my noodle back in the game after barking up half of my lung from some pestilence I got while down on the coast of California there. I don't know what's going on. How are you doing?
Better than that. Yeah, whatever that means. I'm glad I don't have it. But no, it's good. Happy for the new year.
Yeah, happy New Year. Happy New Year to you. Todd, we were just discussing the Fria and Green Growth Brands transaction, and I was wondering if you had any participation in it, first of all, and if yes, then let's hear about that. And what's your expectation for the outcome of this takeover offer, which it's being suggested in certain circles that is not as arm's length as it is being portrayed to be?
Yeah, so we have positions in both. Green Growth, we built a bit of a position. Aphria, we've had a trading position. We talked about it last time I was on your show, playing it through calls. We think the assets are worth probably double what the stock price is worth right now. I don't have any insight on Green Growth and the inside track there. I think there's a lot of shorts that are spreading rumors. We're just looking at, from an asset standpoint, we think Afria's got some value. And playing that through defined risk. And Green Growth, we like the management and we like the backing, and certainly an aggressive move, but with Aphria down here, who can blame them for trying to get it at that price?
You bet. Okay, so do you think that Aphria shareholders are going to tender to that offer, though?
I don't know. Like I said, we think the assets alone are probably worth 2x what the stock price is worth, but certainly reputational damage has been done. Be interesting to hear that retort from the company that was promised a while back. But again, it's a New York Stock Exchange company. You can't expect them to get into a Twitter war over the future of their company. So this is the big leagues. This is where the adults come to play. So hopefully they're going to continue to operate in a manner consistent with the New York Stock Exchange listed company.
You bet. And so all this weakness that we saw at the end of Q4 2018 in the cannabis space, largely driven by global macroeconomic weakness. What do you see happening in the few innings of 2019 in terms of all that?
Yeah, certainly the macro landscape hasn't helped, but I think there was a fair amount of tax loss selling. I mean, we saw it. It was pretty aggressive. I mean, a lot of these names, you have to remember, the global cannabis proxy that we follow had two separate 50% plus downdrafts in 2018. That's pretty amazing. Ended the year about 55% lower. So a lot of tax loss selling into year end, and a lot of these things are quite illiquid. And you couple that with the retail ownership. Again, a lot of institutions haven't entered the space yet, particularly on the U.S. side. So you see this outsized move to the downside, we think exacerbated by tax loss selling. So to see this move today is not all that surprising. We still think Canada, needs a couple of quarters to sort of build out and get its footing under it. But with this sort of declines that we've seen, a lot of that's probably baked in. Still think the U.S. is where you want to be, and still think biotech's going to probably be the next kind of phase higher as these clinical trials start to come through the pipe this year.
You bet. Do you see the issue with, and it's just, I ask this because we don't really understand the implications from Canada with the federal government in a partial shutdown mode as a result of the disagreement between the president and the Democrats. If that persists, and is it something that you see likely to persist, but if it does persist, is that got any long-term implications for cannabis industry performance? And if it's not going to persist, what's going to bring a resolution, and what does that imply for longer-term cannabis performance?
Well, certainly because of the way it's shut down and the DEA still being up and operating, there is that risk that you're going to have some sort of crackdown. But we think that's going to be more about the illegal operations. We think the FDA also is going to come and crack down on a lot of claims and a lot of the labels and what a lot of these manufacturers are claiming, right? It's going to be a lot like vitamins and supplements. It's what you can claim. So we think there's going to be a lot of regulation. We actually think that's a good thing as the industry starts to take shape. But looking forward, obviously, a lot of the catalysts that we're looking for going into the new year surrounds things like banking reform. So you need a government that's actually up and running to move these things forward. And so over the longer this lasts, the less positive or potentially more negative it would be for the cannabis space.
Sure. And what about the bigger macroeconomic picture globally? I mean, certainly the trade war with China is sort of the recurring theme. Brexit, a recurring theme. Where do you see the whole macroeconomic picture evolving toward going forward, especially as it pertains to global interest rates?
Well, I mean, I think it was the last time we were on, we were talking about how I look at the world a bit holistically and go through these charts of all these countries, and I go through the charts of all the sectors within the U.S. space. And what struck me was really the synchronized swim lower. Like a lot of these charts all broke. And I'm talking China, I'm talking Germany, I'm talking the stocks, I'm talking the home builders. So, and this has been taking place for a few months now. So, in the broader macroeconomics, through that lens, I think that there's going to be some rough sledding. But it's interesting to note, it's sort of the mirror image from last year. Remember last year at this time, we saw crypto ripping, we saw cannabis ripping, we saw equities ripping, and everybody was real bullish, and we saw how that ended. This year, we see everything sort of cratering, and everybody's sort of expecting a bear market and looking forward with a lot of negativity. So maybe we see some upside surprises this year. Maybe not in the macro side, but I do think it's going to be a big year for cannabis.
Great. Okay. And the price of gold has been rallying quite strongly throughout the last quarter of 2018 and into the new year. Is that got implications? Does that scare you at all? Does that have any bearing whatsoever on your thinking, planning, etc.?
It doesn't really factor into how we're looking at the world. I've had a trading relationship with gold for a long time, but it's not a core position. I just think, people talk about it as being a defensive play. I agree insofar that it's a rock, and if you get into trouble, you could hit somebody with it. But I don't necessarily look at it as an investment asset. It's not so, I know I'm talking to Canadians here, so I'm probably going to get slapped around, but we just think there's better opportunities there. And with that said, gold will probably rip about 1,000 points by the next time I'm on your show.
Yeah, you bet.
Todd, from where you sit in New York, are there a lot of private companies waiting to go public in the marijuana space that you know of, that you hear this company's coming public, or is that window relatively closed right now because of the market conditions?
No, it's a great question. We saw this heading into the fourth quarter. With all the MSOs that listed, obviously you saw it happen to Curaleaf and Acreage and Cresco and Harvest. A lot of these things came in 50%, right? Got cut in half from their RTO prices, and I think that really spooked the market. There's a lot of paper that's out there. For our money, like we own those stocks that I just mentioned, and we use price to our advantage to add more. We're looking at sort of our projections and our internal research on what we think they're going to do in revenues in 2019 and 2020, and we can make the case that as long as they execute, that they're cheap here. But there is a lot of paper that's waiting to come public, and I know there's a lot of bankers that are waiting for market conditions to improve before this paper will come public. But again, remember where we are in the cycle. It's so early in the cycle right now that institutions still can't participate on the U.S. side. So a lot of that demand is on the horizon, in our opinion. And as that starts to come through over the course of the next year or so, we think that the markets are going to lubricate and open on up, and we're going to see a lot of good companies come to market and trade through a public domain. Again, we look at the public side because that's how institutions are going to articulate their investment strategy in cannabis going forward, right? We think Putnam, Fidelity, Vanguard, all these guys are going to come in. They're going to have to take a position as a growth hedge, especially with what we're seeing in tech and the slowdown. There's not that many places where you can see growth, and we think cannabis is certainly one of them.
Mm-hmm.
Interesting.
Yeah. So Todd, during the holidays, we heard that, or just before the holidays rather, we heard that Tilray had really solidified its relationship with Novartis, and we didn't really get the reaction in Tilray's stock that we expected. And I'm wondering, do you think that might be somewhat symptomatic of investor fatigue, or at least investor caution in the face of the proliferation of non-performing IPOs in the final part of 2018?
Certainly, one of the things, I've been on the street 30 years, and the reaction to news is always more important than the news itself. And you could look at the Kronos and Altria deal and the reaction, the muted reaction there, and we sort of looked at each other and said, uh-oh, if this isn't going to sort of spark the tape, what's it going to take? But again, into year end, I think there was a lot of forced selling, there was a lot of tax loss harvesting, and that's behind us now. I think that we're going to continue to see deals coming through, obviously. You know, Tilray, Novartis, they're each ponying up some money. It's a little bit of a different dynamic, and of course you have this lockup stock that everybody knows is coming in the coming months. So you know, I don't know. I still think Tilray is sort of, you know, I think it's done a lot of damage to the psychology surrounding cannabis, and it's not a name that we own or want to own here. We think there's a lot of better companies. You mentioned Organigram as one of our positions. We think Greg's great. We think the biosynthetic side is great, and we think the brand is terrific. So, you know, names like that over names like Tilray, I think, make a lot of sense here.
So Todd, like you mentioned Organigram, and I looked at it earlier. Why all of a sudden? And I mean, I've been around this game for decades, yep. and I'm asking this kind of rhetorically, but why all of a sudden today does this thing get a bid? Like, I mean, the last few days have been pretty good. It's up 50% in a week, isn't it? Like almost.
Yeah, but it's not alone. There are other names that have popped. I mean, but you're also looking at the stock that's down 50% in the last, you know, since October, right? So it's all relative, right? It's up about $1.50, but it was down about $4 or $5.
Yeah.
So again, I think a lot of it's tax selling moving out of the way, and tax loss harvesting moving out of the way.
Sure.
I think organic, you know, the analysts who do cover this stock, you know, certainly look at it as one of the names that you know, should be attractive based on their management, based on the biosynthetics, based on the brand. You know, but there's a handful of names like that out there that we think are becoming more attractive, obviously as a function of price, and looking forward, you know, starting to nibble a little bit more on the Canadian side of the equation to supplement our U.S. holdings, our Australian holdings, and our biotech holdings.
Great, Todd. Well, amazing contribution as usual. We really appreciate your insight. We'll come back to you next week. Thanks for joining us today.
Yep, thank you. Thank you. Happy New Year, guys.
Happy New Year.
Thanks, Todd.